Most scalpers fail because they are too slow or they trust just one indicator. But here's the hard truth. You are competing against algorithms that move in milliseconds. If you are trading with just an RSI or just a simple moving average, you are essentially gambling on noise. But what if you had a system that tells you exactly where the big institutions are hiding? A system that forces you to only trade with the 10,000-pound gorilla, the trend, and then pinpoints the exact second to click buy or sell to catch the bounce. Welcome to the Masterclass. Today I am fusing the 200 EMA for major trend bias, the 50 EMA for dynamic support or resistance, the MACD for momentum confirmation, and the CCI for exhaustion detection. By the end of this video, you will have a concrete mechanical strategy to scalp 10 to 20 pips with a 75% plus win rate. No guesswork required. We have a lot to cover, so hit that like button. It actually helps the algorithm push this to other traders who need it. Let's dive straight in. Part 1. Why these 4 indicators? Before we look at charts, you need to understand why these tools work together. If you slap random indicators on a chart, they will conflict. You will get buy signals when the market is crashing. So here is the hierarchy of our strategy. 1. The trend captain, 200 EMA. The 200 exponential moving average is our long-term filter. If the price is above the 200 EMA, we are strictly long. We are buy only. If the price is below, we are strictly short. If price is chopping through the 200 EMA, we walk away. We don't trade. Why? Because scalping against the tide is the fastest way to blow up your account. The 200 EMA defines the macro bias. 2. The dynamic trigger, 50 EMA. The 50 EMA is our entry zone. In a strong trend, price rarely returns all the way to the 200 EMA. Instead, it bounces off the 50 EMA. We wait for the price to retrace and touch, or come very close to, this yellow line. That is our value zone for entry. 3. The momentum gas pedal, MACD. Now we need fuel. The MACD, standard settings 12, 26, 9, is our momentum check. We are not looking for crossovers necessarily in scalping. That is too slow. Instead, we look at the histogram. We want the histogram bars to be expanding in our direction, or at least changing color from red to green. If you are buying, the MACD line must be above the 0 line or curling up aggressively. 4. The sniper scope, CCI. Finally, the CCI, standard settings, 14 period, is our sniper scope. We do not buy when CCI is rising. No, that is chasing. We wait for the CCI to overshoot. In this strategy, we only buy when the CCI has dipped below -100, oversold, and is starting to turn back up through -100. That tells us the sellers are exhausted. We jump in at the exact moment the rubber band snaps back. Part 2. The Masterclass entry rules. Okay, theory is done. Now let's get to the money. Here are the exact mechanical rules to take a long buy trade. A. The long buy setup. Rule number 1. Price must be trading above the 200 EMA. That is your absolute permission slip. You do not take longs below this line. Rule number 2. Price pulls back and touches the 50 EMA. It doesn't have to be perfect. Within 1 to 2 candles of it is fine. This is a natural retracement in a healthy uptrend. Rule number 3. This is the secret sauce. The CCI must have been below -100, oversold, within the last 3 to 5 candles, and the current CCI must be trading above -100. It is crossing from extreme levels back to normal. That is the reversal trigger. Rule number 4. The MACD histogram must show bullish divergence, or at least an expanding green bar. If you buy now, the momentum is on your side. B. Executing the trade. When CCI crosses -100, you enter immediately on the next candle tick. This is a masterclass in precision. You are entering at a point where 90% of retail traders are panic selling. You are buying their fear. C. The short sell setup, mirrored. For shorts, do the exact opposite. Price must be below the 200 EMA. Price pulls up to the 50 EMA. CCI has been above +100, overbought, and is crossing down through +100. MACD histogram is turning negative in red. Trigger. Sell when CCI crosses plus 100 to the downside. D. The golden rule. Confirmation candle. A huge mistake traders make is jumping in the second the CCI crosses. Wait for the candle to close with the CCI confirming. In scalping, false breaks happen every second. Waiting for the candle close filters out the noise. Patience saves pips. Part 3. Risk management and exit rules. You can have the best entry in the world, but if you don't know how to get out, you will go broke. Let's lock in profits and kill losses. Stop loss placement. Scalping means you take small losses. Your stop loss goes 5 to 10 pips below the 50 EMA for longs, or 5 to 10 pips above for shorts. You are betting on a bounce. If the price slices through the 50 EMA like butter and closes below it, your setup is dead. Get out. Max risk per trade, 1% of your account. Take profit strategy. Because we are scalping, we are hunting for a quick 1-to-1 or 1-to-1.5 reward ratio. Do not be greedy. Use a 3-tier exit strategy. TP1, 50% of position. The previous swing high, just a few pips away. Take half off the table immediately. TP2, 30% of position. Trail the stop loss to break even. Let it run to the next resistance level. TP3, 20% of position. Exit when the CCI touches plus 100, overbought, or the MACD histogram starts shrinking. Do not wait for the cross. When the histogram flattens, the run is over. This mechanical exit keeps you disciplined. You don't hope, you stick to the rules. Part 4. Chart walkthrough. Step 1. Check the 200 EMA. It is pointing up. The price is sitting above it. We are in long mode for the session. Step 2. Look at that retracement. Price just slammed down hard to the 50 EMA. That shook out the weak longs. This is our trigger zone. Step 3. Look at the CCI. It plunged to minus 150, deep oversold. But look at the next candle. The CCI line is climbing and just crossed minus 100. That is the hammer signal. Step 4. MACD confirmation. The histogram is shrinking. Momentum is shifting. Step 5. Entry. After the CCI cross, I enter a market buy. Stop loss is 6 pips below the 50 EMA. Step 6. Exit. Look at the MACD histogram. It started to flatline. I closed the trade at the next resistance level. That was a 13-pip win in under 2 minutes. That is scalping. Part 5. Common mistakes and mindset. We are almost done, but I have to warn you. Most of you will try this strategy and fail because of these 3 reasons. Mistake number 1. Trading a flat market. If the 200 EMA is flat and price is weaving through it like a snake, do not use this strategy. It will fail. The CCI will whipsaw. The EMAs mean nothing. Only trade this in a strong trend. Mistake number 2. Over-leveraging. Scalping is high frequency. You can lose 5 trades in a row even when the system is good. If you risk 10% of your account on each trade, you will be bankrupt in 45 minutes. Risk 1%. Live to trade tomorrow. Mistake number 3. Trading high-spread assets. Do not try this on exotic Forex pairs or low-volume meme coins. You need tight spreads. Stick to EUR/USD, XAU/USD, gold, BTC, or S&P 500 futures. If the spread is wider than 2 pips on Forex, walk away. Part 6. Conclusion and your homework step action. 1. Filter price must be above/below 200 EMA. 2. Zone. Wait for retrace to 50 EMA. 3. Trigger CCI crosses back through plus or minus 100. 4. Fuel MACD histogram confirms. 5. Execute. Enter at candle close. There is your blueprint. Combine 200 EMA for direction, 50 EMA for entry, MACD for momentum, and CCI for exhaustion. It is a high probability sniper setup for the 1-minute and 5-minute time frames. But you don't have to take my word for it. I want you to go do your homework. Open your TradingView or MT5 or MT4 demo account. Apply this strategy to the charts for 50 trades. Do not use real money yet. Just screenshot the entries. See the win rate for yourself. If you learned something today, hit like and subscribe for more institutional edge strategies. Stay disciplined, stay liquid, and I will see you on the next one. Happy scalping.